Good morning, everybody. Firstly, my apologies. I'm suffering from a bit of a cold, so I don't usually have this husky voice. And if I do start to get a little bit blocked up, please excuse me. So as briefly referenced, my name is AndrewRush. I joined Discover about 9 months ago, so still fairly new. My background is about 30 plus years in payments, so less perhaps on the loyalty side, although loyalty as a peripheral, particularly for card payments, has always been there with me. I've worked at Barclaycard for a number of years, probably too many to count, also MasterCard, Telefonica O2, and most recently Elevon as head of acquiring from a product perspective. So from my perspective, I find this a particularly interesting area because it really truly covers the entire payments value chain, which I've had the privilege to experience so far. So what I'm going to try and do today is really just take you through some information that we have in relation to how we're actually seeing payments evolve, and particularly the opportunities presented around CardLinx and CardLinx loyalty. So the key thing for me to really also emphasise for those of you, I know there's a number of you who are new to this particular organisation, is who are Discover. So Discover Global Network is actually the global payments brand of Discover Financial Services. And we have three primary businesses. We have Discover Network, which has millions of retail and cash access locations around the world. We also have Pulse, which is one of the US's leading ATM debit networks. And then we also have Diners Club International, which is a global payments network, as was referenced by Silvio, one of the oldest payments networks in the world, and present in more than 190 countries. You probably saw, again, I think it was Silvio's earlier presentation, Discover Card is actually a bank in its own right. So unlike other payment schemes, we are both a bank as well as a payment scheme. So that brings interesting challenges for us at times in terms of regulation, having to think about things in terms of how things can operate from an issuer perspective, but also then thinking about how things can be leveraged from a network perspective as well. But interesting challenges, but also creates a lot more opportunities as well as we start to try and take some of our very successful solutions that we've introduced in the States through Discover Card and start to internationalise those. So again, just to give you a sense of scale, we're not a small player. You saw that we had nearly 40 million cards, active cards in the States already, but actually the Discover Global Network actually supports more than 150 million cardholders around the world today in more than 44 million merchant locations. And across those 190 countries that I referenced in terms of Diners Club, but again, an incredible amount of dollar spend in terms of $400 billion of spend supported. And if you actually look back to how some of that is actually achieved, it's not achieved all through ourselves or through Discover Card. It's actually importantly achieved through a series of relationships and partnerships that we have, very strategic partnerships that we have with network alliance partners that are referenced on the bottom of this slide. So we have some very large and very familiar names, Elo in Brazil as an example, RuPay, MPCI in India, JCB, Japan, and China UnionPay. So what, as was referenced I think slightly earlier, is that typically in a number of instances where these issuers are issuing cards in their domestic network, where those cards are then taken outside of their domestic environment, they will typically then be operating across the Discover Global Network rails in order to facilitate transactions. So again, quite a complex environment, but very, very much driven at its heart by partnership and the flexibility to accommodate domestic issuers and processors. So we believe that's one of our key points of differentiation comparative to where we find ourselves in the market today. So this is just a quick reference to a study that we carried out on behalf of Discover Card in the US. And perhaps not necessarily that surprising, but what you can see here is that it talks about really about how primary card members in the US want to actually see that Discover Card is actually accepted. So where you have that brand awareness, where you have the recognition of particular card types and issuers in particular, there's a desire for those card members to be able to see that cards are accepted. And what I think we're seeing across the world is an explosion in the demands for acceptance of multiple different card and payment types. And those include cards in their own right, but also more digital types of payments, and those digital payments can still form part of that overall relationship that a consumer has. But what we also see is that in instances where payment types are not necessarily accepted within a particular retail outlet or in an e-commerce environment, particularly in a retail physical environment, cardholders will not necessarily return for a period of time. Because that is their preferred method of usage, and therefore that creates a barrier to actual conversion of that particular transaction. And frequently it can actually be emotionally that rather than the financial institution that can sometimes get blamed in that context, it can actually be the retailer themselves that can be the brunt of perhaps concern expressed by the consumer at the point of sale. And again, that's not something that a retailer or indeed the whole ecosystem wants to actually see. So ultimately we want to try and make an environment where as many financial payments tools are supported and accepted as possible, particularly when we're talking about cross-border transactions, and we're seeing high levels of spend being made by foreign visitors into different markets as well. Sorry. So why loyalty matters? Well, loyalty matters clearly because we're all here in this room today. We wouldn't be here if we didn't have a vested interest in making loyalty successful. And according to a recent Deloitte study, you can see some interesting statistics here. And 26% of customers use a loyalty scheme at least once a week or more. I guess the important thing to reference here from my particular perspective, my company's perspective, is that's not just about online. Online tends to be where the headlines hit and where the most amount of attention is driven from consumer bodies and from industry bodies as an overall whole. But physical representation of loyalty is incredibly important from an emotional perspective, from a consumer's point of view. Non-physical forms are absolutely becoming more and more important. But nearly 90% of all transactions that happen across in the world today are done in a point-of-sale environment rather than necessarily in an e-commerce environment today. Absolutely, that's shifting, and there's more that we can collectively learn in a physical environment from the online environment in order to improve that overall customer experience. Because again, what customers want to get to is that personalised rewards driven by purchase history. And again, that is where the technology advances that are being made, particularly in an online environment, can actually start to be applied much more intelligently to a physical environment as well, so that we can bring the two together in the way that Silvio represented with his convergent Venn diagram at the beginning of the day. So what we're increasingly seeing from a Discover perspective is three core attributes coming through. The first one being loyalty programs demonstrating convenience. So from a consumer's perspective, I want it to be fast, I want it to be easy, and I want it to be frictionless. And a good loyalty solution needs to have that element of loyalty transparency, particularly for the more demanding younger generations. Clearly I don't represent that, but the more younger generations of today's society. Control is the second point. I want it to be able to interact and engage on my own terms. And we referenced that a little bit in terms of the principles around GDPR as an example. But increasingly consumers want to be able to actually control and determine how that loyalty program is able to be managed. And that doesn't necessarily mean it has to be a loyalty program for every individual, but it's actually giving the consumer a greater sense of being able to influence and determine how that actually operates. So control is the second point I'd make. The third point is context, and this again brings it back to the point of personalisation. A good loyalty program solution knows who their customers are, but rewards them in a way that's really personal and valuable for that customer at the time that they want it to be. So ultimately, what we're seeing is, because of some of those changes that we believe are happening in the industry as a whole, a much greater degree of interest on companies, and again, this is a Deloitte study, but saying that there is going to be a massive amount of investment made in loyalty programs, customer retention programs over the course of the next couple of years. So, excuse me. This is where I get to the point in the presentation where people who helped me put this presentation together thought they'd have a little bit of fun with me. So you'll have to bear with me a little bit on this. So they thought it would be a really good idea to come up with a sort of a storyline which talks about Andy. He has to regularly travel to the corporate headquarters, which happens to be in the US. He happens to be a bit of a rewards junkie, so he likes to take advantage of every reward that's going. And on most trips, apparently, he's fueled exclusively by coffee. I'm not sure how many of similar people there might be here in this room today. So the principle is that this individual is going to the US, just taken a flight. He's now just arrived into the destination, and he's in desperate need of that first cup of coffee, having got off the flight. So he spots this coffee shop, well-known brand, and makes a beeline to that particular coffee shop and purchases a cup of coffee, uses his payment card, and actually gets rewarded on his card. So he doesn't have to have a barcode, he doesn't have to have a coupon, he doesn't have to have a membership or anything. It's instantaneous on his actual card. So he is rewarded in that manner. So now he's got to crack on, get onto the office. So the next stage then is he is looking to actually use public transport, because he's used to public transport in London. It works most of the time. And he's decided that he's going to catch a train, and he's then going to move on to use a bus to get to his final destination, the corporate headquarters in this particular destination. So in this particular instance, can literally tap his card, and the card actually operates as his public transport pass. So again, another attribute that can be actually enabled within the card payment device itself, and enables a connection at a physical point of sale. The next piece, so his journey's going pretty smoothly here. He's arriving a little bit in early into the office. And as with a lot of corporate headquarters, it's not uncommon nowadays to actually see a coffee shop in that corporate headquarters. And by good chance, this one happens to be the same brand of coffee shop as the one that was at the airport. So in this instance, he decides, yep, getting a little bit jet lagged at this point, perhaps a little bit like Kyle with his 4 o'clock. I sympathise with that, Kyle. And he decides he needs that extra cup of coffee. So goes ahead, makes another transaction, and again gets another reward automatically applied to the card. Now, as he's going through his day, he has a 2-hour budget meeting, because we're all pretty much at that time of the year, aren't we, where you're going through those onerous budget pieces in terms of, are you going to be a winner, are you going to be a loser, what it's going to look like next year. And he's gone through a really intense set of conversations with the finance people, getting this budget sorted out. God, does he need another cup of coffee? I told you it's fueled on coffee. So in this particular instance, he goes back to this coffee shop, makes the third purchase, but the card is actually intelligent enough to know, because of information that's been loaded into the card by the merchant as well as by the issuer into the card, that actually says, okay, under the rules that are contained within the chip, I can see that this is a particular promotion that you have, and you've bought 2 cups of coffee, that entitles you to 1 free cup of coffee. So example there would be instant redemption at point of sale. Customer doesn't have to do anything about it at all. So free cup of coffee, feels particularly invigorated, and then decides that, okay, now I get to actually check out, or rather check in. So I'm going to the hotel. And in this instance, heading off to the hotel, presents his card at check-in, and the card itself is then activated to become the actual door pass, so the door key for the actual hotel room. Again, through information and partnerships built between retailers, merchants, and other solution providers, the ability to actually contain that additional set of data within the chip, so that the card can actually double as a room key. And not only that, but because of the way the hotel uses the data, it can also act as the safe key to the safe within the room as well. So again, you're ending up with a very multi-purpose, multifunctional token that the individual can use. So it makes Andy's job a little bit easier because he doesn't have to lose his room key. He doesn't have to, because you won't lose your credit card. He doesn't have to lose his or get to his room on the 10th floor and then find that the key doesn't work, and then have to go all the way back down and get another one. He's got that all enabled on his chip card. So at this particular point, he then, and this is where it stops becoming me, by the way, because it talks about going to the gym. And in this particular instance, this individual has decided, yes, he definitely wants to go to the gym. There isn't a gym in this particular hotel, boutique hotel, whatever, but no particular gym. But there is a partnership between the hotel group and a gym chain within the vicinity. So again, as he checked into the hotel, it was preloaded automatically onto the card that there was a free gym pass. So again, as an identity token, you can go and make another connection to the particular gym, use that as the access point, using that card to leverage into the actual gym without necessitating a payment. That can be sorted out between the arrangement between the gym company and the hotel in that instance. From a consumer perspective, completely frictionless, smooth, make that transaction. But of course, whilst you're in the gym, this individual thinks, oh my God, I've got a really important presentation to make tomorrow somewhere in St. James in London. And I forgot my suit, so I need to go and buy a suit. In this particular instance, the suggestion is you get into a cab. Okay, you're working on the mobile phone, you know where you want to go, you've got a rough idea in terms of the type of store you want to go to. And online, you're looking to see what type of suit, because you're very urgently wanting to make sure this is a quick pickup. You've worked out what it is, you place the order, and it's available for pickup. And again, some of this can actually be generated through the chip interaction. By the time you actually get into the store, assuming it's probably a Harvey Nichols store, by the way, but you've made the purchase of the suit, and you've gone to a click and collect environment, and the card actually becomes the identifier in order to actually collect the item as well. And again, that helps with the smoothness of the transaction and receipting, etc. Excuse me, I am starting to lose my voice again now. By using that particular ID, as I said, you can actually pick up the order in a more smooth manner, and he manages to get out the store. If it was Harvey Nicks, he'd have wanted to stay longer, clearly. But in this instance, he has to get on pretty quickly. So one more thing to do at this particular point. He's on the obligatory visit. And again, Carl might be doing this a bit later. Team in London, and needs to take them out for dinner as well. And in this particular instance, he has to pick up the bill because he's the generous boss. He actually gets rewards points for the purpose of actually paying for the dinner, and he could actually redeem those reward points if he wanted to in order to make the bill cheaper. But then he has a think, and it's a corporate expense, so why would he do that? So he's going to keep the points for use somewhere else for his own personal benefit a little bit later on. But the principle again is that, again, there's an opportunity to leverage the functionality and the capability within the chip to actually attain that rewards and give the option of instant redemption for those rewards as well. So the purpose of this story is really to talk to you about the product set that is actually supporting and delivering this capability. And in our Discover global network, we refer to that as something called DPAS Connect. And it's our chip capability. And we're launching it this year, an additional version of it. And today it includes support for contactless, mobile transactions, as well as in-app transactions. And in essence, though, it goes much further than traditional payments because it's really, through its data capacity and capabilities, it's starting to open up the opportunity to manage many more applications than just pure payments, or even what people would have traditionally thought of as immediate peripheral payments-related transactions. And again, the emphasis being about how you can leverage the data capability, how you can leverage the moment of now, and how you can really leverage the ability to create a much more frictionless experience for the consumer and therefore create a much more engaging experience. So let's just have a think then in terms of how we applied that. Okay, so if we play that back a little bit, you'll recall that I bought an awful lot of coffee in that process. And the principle here was that the DPAS Connect card actually allows the card and terminal to communicate in near real time to actually then deliver rewards at the time of interaction. So basically digitally replicating the equivalent of a punch card. So again, you still see a lot of that happening within coffee stores today. And again, some are using mobile applications in a manner to do that, but it's equally achievable through card and mobile interaction. The second example, we talked about transit. And again, the ability here to actually be able to use your payment card as a replacement for Oyster, or in this particular instance, a US transit system to use for traditional payments. So again, you'll see this becoming much, much more prevalent across the world. You know, in the UK, we're very used to it from an Oyster perspective. The US is getting more used to it in some of its predominant cities. But you're going to be seeing this happen much, much more from an engagement model right across the world. Hotel room access, again, the ability to potentially operate additional feature functionality in partnership with very strong brands. It doesn't have to be a massive brand. It could be just particularly a very premium brand that's emphasizing on loyalty and the nature of the relationship that they have with the customers. We talked about the gym access. We talked about the cab. I referenced very briefly about the ability to manage e-receipts. So it is possible to actually, and we've developed this capability, to actually have a transaction read of an email address, a tokenized version of that held within the chip, so that as you make the transaction, if it's recognized that that's how the consumer prefers to receive their receipts, that can be part of the intelligence that actually has the communication going on with the terminal to actually then prompt that receipt to be automatically distributed to the consumer's email address rather than necessarily generating a paper receipt. So again, all of these sorts of things are about how we can potentially make much more intelligent use of consumer preferences and bring it back to that personalization. And we use the suit as an ID, as an example of how we can use identification to aid things like, in that particular instance, pick up and collect. And then we talked about the traditional, what I'd call more the traditional rewards in terms of points for a purchase in a dinner environment. So ultimately, from our perspective, DPAS Connect and Discover is able to provide one card and provide many ways of actually serving for what we believe the consumer is ultimately looking for, which is those three items I referenced to you before: convenience, context, and control. So for DPAS Connect, as I said, it's available globally, and the cardholder can use the same capabilities, that's access, loyalty, e-receipts, those sorts of examples I was referencing, whether they're at home in the UK as an example, or indeed whether they're travelling abroad, because of the operation of the network that they're running across, which is the Discover Global Network. So as long as DPAS Connect is enabled at the point of sale and with the issuer concerned. Now, one of the other things that I think is pretty unique about the solution that we have and starts to present more opportunities for businesses, and I hope some of you in the room today, is the opportunity for new partner opportunities. So we're able to support not just traditional payment cards, but also private label cards. And in this instance, this means we can also support technical licensing to loyalty solution providers, if so required. And in addition to that, we're also able to support closed loop solutions. So we have an extensive prepaid business in the US that we operate on a white label basis. Some people may be surprised to know that we're actually the network behind Apple Pay Cash in the States as well. So not the Marcus version that was referenced today in terms of Apple Pay credit cards, but we are the network behind Apple Pay Cash as an example. So again, there's the opportunity for us to leverage some of the technology that we're talking about in many, many different mechanisms going forward. Okay. I'm getting ahead of myself a bit here. Okay, let me talk about this a little bit then. So, the main thing from our perspective is trying to think about how the relationship that we're talking about here that exists with the consumer ends up becoming a top of wallet. So particularly from an issuer perspective, top of wallet is still referenced all the time in terms of how do I make sure that my solution can be as dominant as it possibly can be. I think you heard the previous speaker in the questions, we were talking about the importance of brand presence from an issuer standpoint, particularly when there are so many aggregators that are actually supplanting themselves in the value chain in some shape or form, and actually mitigating or minimizing in some instance the primary position of what banks have traditionally known to be able to think about as owning the customer. We all know that doesn't exist anymore. The only person who owns the customer today is the consumer themselves. And it's very easy to switch on or off that functionality. What we're trying to do with this particular product type is give the consumer and the different parties that want to be participating to it the ability to actually personalize that solution set on a much more deeper level. So innovation is really key from an issuer's perspective, and we believe this particular product and solution set gives issuers the opportunity to be able to do that. And if you think also as an extension into co-brands, co-brands around the world, co-branded credit card products particularly, have been very prevalent over the years. However, one of the challenges has been is how do you actually determine something that actually links that company very intrinsically with the issuing company? So how do you make it a much more seamless experience? Frequently the relationship of credit card co-brands in some shape or form is sort of superfluous feature functionality offers, but they don't actually integrate in any particular shape or form. Something like a chip-based solution can give the opportunity to really bind that relationship in a way that probably hasn't really been properly leveraged before. And an example on that would be, for instance, if a hotel brand wanted to work with the room access key, some other entities, for instance, campus cards, the ability to actually have multiple different functionality all managed through that single chip enablement, and the data that can drive in terms of what the consumer is actually doing and how they're performing and what they're working on, but how that can then lead to more intelligent offers, ultimately card-linked offers, to be actually presented to those consumers. So ultimately, DPAS Connect is about being more flexible and offering more issuers more control, but making sure that there's the ability also to apply more opportunities and capabilities without the continual requirement to reissue new plastic. So that's always been one of the biggest issues from an issuer's perspective in terms of how do I manage my cost base. So this whole thing is intended also to actually allow the change of attributes within the chip on the fly through the interaction either through terminal or through ATMs. Merchants, again, the ability to support both small and large merchants in terms of what their particular requirements are. So whether it be a very large loyalty program that wants to be operated on, or potentially a coffee chain type loyalty program. The capabilities and the functionality are there within these sorts of point of sale chip-based solutions to be able to be leveraged. Solution providers, so in terms of loyalty providers, again, we're interested in looking at how we can potentially license the technology. We're also interested to see how we might be able to work more with loyalty providers more broadly and actually address the broader changes that are going on within our industry on a broader footing. So we believe that there are significant opportunities right across the ecosystem. Fintechs typically, particularly from an e-com environment, are leading the way in terms of what the challenges are to our industry and the challenges in terms of how you engage with consumers. But there's lessons to be learnt there, there's partnerships to be made there to actually improve a frictionless journey. We believe that a product such as DPAS Connect provides a foundation for fintechs and established players to leverage alike. And that pretty much is what I wanted to take you through today. I hope you found that interesting. Thank you for bearing with me. I'll go and have another cup of coffee now. So, thank you.
Thank you so much.
Just held out.
I still have 2 questions.
Yeah, and I'm going to sit on the squeaky chair.
Yeah. Oh yeah, it's speaking with us. I mean, I have a question about data.
Okay.
Data in commerce has been a real focus area. And my question is now, what are some of your observations about how payment companies should actually think about data?
Okay. So again, having worked in different parts of the ecosystem, on the acquiring side as well as the issuing side, the first and foremost thing for me would be security. Mm-hmm. So if the data is not managed in a secure manner, then trust goes, reputation goes, the whole piece just starts to fall to pieces. So clearly security, number one. I think the other piece then is about what as an organisation, so if I take Discover as an example, we can potentially do to enhance the quality and the reliability of the data. So the old adage of rubbish in, rubbish out, again, the payments industry has had a history of not necessarily having good, strong merchant data and merchant narratives. So we've been spending a lot of time in, we actually have our own loyalty platform that we're now rolling out internationally at the moment. And we've spent an awful lot of time investing time and effort with issuers and with acquirers to actually enhance that data using machine learning and artificial intelligence. So I think that's one of the really big areas that needs a lot of focus on at the moment.
Thank you. My second question. As Discover continues to grow across Europe, what are the key product priorities that you have at Discover?
Crikey, okay. I would probably say the main priorities are clearly the rollout of our DPAS Connect solution. We want to do more innovation and experimentation around the capabilities of that because we believe it's a key area of innovation that hasn't necessarily been leveraged sufficiently within the industry as a whole. And chip technology is relatively mature, so the capabilities of it are very well known and understood. The second piece is digital transformation. Again, a phrase that's used very, very regularly. Tokenization is absolutely key, as we're seeing across the market at the moment, as is the expansion of digital wallets. So, you know, we're very familiar within the UK in using digital wallets and in main European countries in using digital wallets. But again, we have a large number of markets within the Europe, Middle East and African region, as an example, that still have no material traditional digital wallets out in those marketplaces. So I think that's another whole area of development. I think you'll also see much more cardholder services coming through from us as a group, because again, what we want to do is we want to get to a point where we're actually providing premium engagement with consumers, but engagement in services that are perhaps data-driven, can be payments data-driven, but might have been traditionally thought as peripheral to core either payment scheme or issuer activities.
So many things to do.
Too many, yeah.
Okay.
And that's the biggest challenge I think for all of us in the room.
You have got your coffee, right?
I got my coffee, but and again, it's all about prioritisation. So finding those things to spend the most optimum amount of time on in order to be successful at, rather than trying to spread yourselves too thinly.
Sounds truly exciting. So, are there any questions in the audience? Please, yeah. Do you have a microphone? If you could also state your name and company name, please.
Yes, I'm Nirad Kaul. I represent FIS WorldPay.
Okay.
I had a question on DPAS. Are you limiting DPAS only to the physical card with the multi-chip, or are you actually? There's a digitized version of DPAS that can be used, because with the digitization of the physicality of the card, will disappear at some point. You would. So yeah, we have DPAS Connect, and then we have a tokenized version of that as well that's being deployed out at the moment as well. So yeah, the ability to do both has to be the future. Okay, and you're looking for active partnerships within Europe right now?
Yeah, happy to. So we actually are already piloting, and it will launch early New Year in Turkey, a combination card. And in Turkey, we work with a network partner there called Troy BKM. And the combination card capability is actually the ability to have a debit and a credit function on the same card. Debit card and credit card on the same card. Now that means that as a consumer you could have both cards and you could then choose to use which card you want to at point of sale, but equally you can have a progression, so you can switch one off and you can then switch the other on as the consumer matures potentially. And the same would be potentially true from a loyalty hierarchy as an example, so you might want to move through that. So yes, we're already starting to bring the technology into play in the actual markets itself, so yes, we're interested in having those conversations.
Anyone else who wants to ask a question?
And it is the chair squeaking, not my joints.
Hi, Campbell Shaw from CardLinx.
Hi, Card.
Great presentation.
Thank you.
I'll be a bit cheeky and probably ask a positive question in a negative way, if that's okay.
Yeah, that's all right.
Super exciting to see the whole end-to-end journey come to fruition. How do you avoid failure by ensuring that card acceptance and consumer growth meets the depth and breadth of the ability to sort of get the enriched experience, if that makes sense?
Yeah, it's a good question. I mean, from a Discover perspective, and Diners Club and our associates, what we're trying to do is concentrate very much on growing our acceptance footprint. So we know we have more to do on the acceptance piece. Diners Club, as an example, is not a well-known brand today in the UK per se, but in other markets it's exceptional. So we have, in some markets we will have 95% acceptance in certain markets. So what we've spent a lot of time on is actually working in some of those ecosystem markets and concentrating on some of the experiences that we can potentially drive there. The other piece I would say is that depending on the type of solution that you're trying to present to particular segments of customers, if you're targeted in terms of what you want to achieve from your loyalty programs, then you can actually start to align your business activities to ensure that you have that supporting infrastructure around that. So that's very much where our focus is from an acceptance perspective.
Thank
you.
Hope that answers it.
Yeah, it does.
Thank you. Well, we actually decided to pull forward the break. So if it's okay with you, we can now go for the coffee that was being mentioned throughout the presentation. And I think we should be back by what time exactly?
By 11.
11. If you could all be back by 11, please. Thank you so much.
Thank you.
Thank you.